Today, Thursday, August 17th, our 1892 point was naturally broken through, and our 4-hour chart continued to be in a short position. If we had 30 minutes, we could now follow the 30-minute channel. There has been a series of declines, and it was also the same yesterday when I explained it. This is a rebound. Where is the strength of the rebound? We will see when it ends, and then we will continue to short. And then of course yesterday we saw this rebound on this trend line and a section of this rebound. It is the pullback period. In those 5 minutes, I can be more clear in 5 minutes. The pullback in 5 minutes is here. The pullback during the day goes like this, and it goes like this again. Then this one falls, and the main driving force of the decline is broken. The main driver of the 5-minute decline has become a mark for our short selling. At the same time, it gave us an entry opportunity. With this stop loss here, we can enter the market and have an entry opportunity. For our entry point, because of this, that is to say, for this entry point, we can choose 618, which is our usual entry point, but this range is not large. He has the possibility of eating and eating. That is, this entire period is actually a legitimate performance. It is a symbolic and iconic main driver of the decline. A symbolic process is our rebound here. The rebound is interrupted. We did it yesterday, right? Did we talk about it yesterday? Let's talk about it in the teaching chapter. One of our rebounds. If this rebound is A. If there is no live interruption, then we have to look at the open line. It means that there is no live interruption at all. There is no straight line. It is the red ratio. If there are none of these polylines, it is simple. How to look at the middle? Let's look at the black line, right? Let's look at the middle form of the black line. And here we can clearly see that it has both segments and its ratio, right? It has both breaks and ratios. At this time, this form is the one we want to look at. Then the sign of the end of this break is that this section is formed. This section is formed. Then our shorting point is right here. We use this as the capital loss and then go short. Then all our market trends are actually based on what we have said in the past few days. Anyway, we have repeatedly said that the 30 channel is a 30-minute channel that extends downwards. As long as the channel does not break, as long as an upward channel is not formed in 30 minutes, we will continue to resolutely short the newly formed upward channel. Then we should pay attention to the risks when doing short selling, because at this stage, what we see for 30 minutes has been in the same form as the K-line Yin-Bien. It is similar to the 4 small stones we see. It is a Yin-Bien K-line Yin-Bien trend. That is, there is no strong rebound on the K-line. There is no strong move. It keeps avoiding the short position. Then it will definitely hit a new low. But there is another possibility that it will rebound quickly and then gain energy and fall. Then or in between, this is the situation after the rebound, which is also very possible, so we are on the seat sheet, like here, we have 5 minutes, yesterday's upward trend. I said not to do it now, because there is no market during the day, and there is no point in doing this rebound. In fact, we did too much on this rebound, which was only a few dollars long, and there was no room for vertical rotation, so we did not choose to do it. Then of course, it sprayed out for the second time, spraying out the 30-minute trend. We also have this trend channel, and we have to follow our rules after it has short positions, and then we go short. It is natural that we continue to trend downward along the 30-minute channel, and then it is natural that we break 1892. Then according to the rules, we also continue the same correlation. We have added it many times. The 30-minute trend is short first. Then if it is broken, it is indeed broken first, and then a new channel is formed. Then we go long according to the new long rules. This is something everyone can do. Opportunities are everywhere. Don't be blind. Believe is to blindly guess. I think if I say that it has a certain probability of rebounding just like my analysis, then you can go long just based on this certain probability. Then you have not formed your own trading rules, so we still have this system. The biggest advantage is that we use wave trading like many people, right? What is the biggest criticism of many people? That is to say, there are thousands of people and thousands of waves. Many people are thinking that you are wrong in counting random numbers. Everyone is different. We don't have this problem here. Anyway, we have all calculated and gone through strict data calculations. This is how it was formed. Then he broke through. That is, if we say that we have 1,000 people and use this 1,000 person rule, if you follow my rule, it will be the same. There is no difference. And now we see it falling in 5 minutes. 5 minutes. Then he may enter and pull back during this period. We will have to watch this pullback for a minute. You have to look at the trend in 1 minute. You can see that it has started to slow down in 1 minute. He has an ascending segment here. The main rising segment is formed, but he does not have an ascending segment. Although this segment is iconic. But he doesn't have anything, that is, he doesn't have an upward channel. The formation of a good upward channel needs to be observed, so his savings also fell. What is a good ascending channel? This bottom is obviously not consistent. Then if it rises and there is a downward mining action here, the upward channel will be formed. If there is no such action, the downward mining has already reached the bottom. So he was eaten up quickly, and his savings fell because he fell in 5 minutes. When we were in a downward trend, we didn't want to follow the trend. Then every time he broke the channel. Just a slight channel break, such a broken channel that is not stable, is a sign of shorting. Unless a complete and standard ascending channel is formed, we can do it, that is, go long. Then, including here, if he slowly stops standing, the possibility of going long will become greater and greater. It's not about the possibility of going long, it's about the possibility of a rebound. Let's see if there is room for a rebound. Let's first see if there is room for rebound. At present, there is some room for rebound. We have to wait and see. Can a slow flow standard channel be formed in 1 minute? It is absolutely possible for us to enter the market after it forms a standard channel. We don't have to rush. We don't have to rush for a while. If we rebound, we must wait. Don't think that you can always catch the low point or the high point. Sometimes there are conditions for catching the low point. For example, if it is a disordered interval, then we can catch a low point. This is no problem. Then, for example, if the channel is broken and then created again, let's see if there are any examples. There seems to be no examples here recently. There were examples before. After you break the channel, let's take our daily line as an example. Let's take this daily line and give it to it. At this level, it has a lot of clutter. If we say it's just that there's not that much clutter. We still want it to be simpler. When there is less clutter, because if we have so much clutter at a small level, we can actually do it at a low point. It is a disordered interval. You see after it breaks the channel, right? If it is a slowly breaking channel, then you can try to go short at its high point. It is the same as here. It is a straight point. You can go to this point and go short on the chain. This is shorting. The probability is relatively high. He is going to go in a disorderly range because the channel has been broken. Then there is resistance at the high point, resistance and reversal. Then there is reversal at the small level. There may also be a channel at the small level. In fact, I have told everyone in my rules. How does he look at the reversal? We need to look at this wave. It is a simple wave, not this wave. What we define is a break. In this paragraph, is it a simple break, a complex break, or the super simplest break? This section is all the K-line process. There is no such comparison, right? Then if there is a comparison, we have to consider the process of comparison, which will be used as the basis for our reversal. Then today's point of view may be more divergent. Today's point of view is also very clear. We will continue to go short along the 30-minute channel. Then the short selling conditions are now 5 minutes. There may be a rebound demand. Let's look at our orders in 5 minutes. Where is the normal condition? It is also at the 5-minute trend line. The 5-minute return position, right? Wait here at the trend line and then wait for shorting. If you wait here, just wait for 1 minute. This rebound band forms a reversal trend and reversal arrangement. Let's enter the market. So for this rebound, we haven't arrived yet, right, but we don't have the entry position. 1 minute, we already lack the entry position. 1 minute here, it is inappropriate for us to enter the market again. The gap is too big. It is also a direct loss. No matter how low-key it is not suitable for direct loss. So for a minute, it is not recommended for everyone to operate. And it is also due to another subjective factor, which means that it is now a pressure plate. Then it also includes the recent market fluctuations. The market pressure does not fluctuate much, so it is not recommended that you operate for another 1 minute. Then for 5 minutes, we just talked about its entry position, which is probably around this position. Everything about it basically supports each other. It is probably at this low point or here that the trend line will continue. It may be near this position and then we wait for the rebound. We have tried the middle solution. If we have not found the solution, then we should not do it. If this happens, we will follow it. It is the slow flow we talked about before. The extended market is the standard channel. Then we will make a 618 line to enter the market. This is us. This is our idea. There are 2 directions of long and short every day. Then, how short is short and how long is long? When short, we have to go short at the short part point, right? We have to have short positions arranged to go short. For example, when we are very strong for 1 minute now. We may definitely be in 1 minute. I am not saying that it may definitely be in 1 minute. For example, we have a very strong market right now. Everyone, there is no particularly strong market in 1 minute some time ago, so I can't give an example. But everyone can understand that you have a psychological bottom, which is when the strong trend market, for example, the one-day upward channel, the main trend rebounds. It is very strong in 1 minute. At that minute, you can follow the 1-minute channel and go short directly. Then stop loss. Set the stop loss. So, it is proportional to the risk. The risk is relatively small and the return is relatively large. Then today all the rules are explained clearly to everyone. It is best that we have to. Just like me, have you mentioned before? Which one should I talk about? We not only have to be at the zero boundary point of our fixed rules, for example, this zero boundary point. When it comes down the descending channel, the zero boundary point should be right here. Zero boundary point, what should we look at? Look at the situation of the K-line and the situation of your pullback. Whether there is a reversal in the pullback. This is where we must know a concept. Pullback also has a trend. That is, the small level pullback is upward. In terms of pullback, it is an upward space. Right, the small level pullback is after the pullback is completed, and then the pullback is to have a short position, and then we have to follow us. For example, we only have space in 30 minutes. Then of course we have 30 minutes as the main one. Then you have space in 4 hours. Of course, 4 hours is the main one, right? There is space in the day chart. Of course, the daily chart is the main place. There is no trend in the day chart. But where do we think it will be? But this is a guess. As for this guess, we are tentative and we will not go. Then if we have the daily chart, just say the daily chart. If it is short, wouldn't we just look here? Look directly, at least look at this location. Then why should we be here? Our order. Let me ask you a question. Our order was just sitting here and then we got it all the way. Now I think I can get it here. Is this appropriate? This is what I mentioned earlier. You didn't look at the road conditions, right? You didn't look at the actual development. For example, the actual development stopped here. It is also possible that it is just a small breakthrough. This is just a very natural interval of the disordered and righteous path. On the other hand, it is the second possibility of the disordered righteous path. If it is a disordered interval, it is a very natural support. Then I talked a little bit. Everyone's plan for today is very simple anyway. Let's repeat the 30-minute passage. Our key positions are 5 minutes and 30 minutes. Let's continue with the key positions here. Observe the rebound situation in 1 minute, and then arrange it when you have time. We will continue to sit short like yesterday. Then if it is 1 minute and an upward standard channel is generated, you can also try to enter the market. Even this stop loss risk is not big. It is something we must experience. Then you can add it. Now, buy.